Hi, this is TradingETFs.com with a market wrap for January 4th, 2016, first trading day of the year. Didn't go so well. And I've got a chart here of the DIA ETF, which is also the ETF that I highlighted in the tutorial video for the LT oscillator. In that video, I mentioned that the oscillator had been going sideways for the last 8 days, right above this zero line, and that we were going to know soon enough whether the market was losing momentum to the upside or whether it was going to turn and start accelerating momentum to the upside. And you look at today, the DIA lost $3 in price, and the LT oscillator is right on the zero line. And considering how fast we moved down today, and the fact that we very rarely can go sideways on this LT oscillator right above the zero line and then have a big down day and that be the end of the decline. Normally you'll see the oscillator continue to the downside because the downside momentum is increasing. And so if we do see that over the next day or two, my expectation is that we're going to see the price of the ETF move all the way down to this 161 to 160 area. That's previous support. You can see a number of closing prices here in the August through September time frame. So if we don't stay above the zero line here on this oscillator, we're going to see the market turn very nasty in a short period of time. At least that's my expectation. If I change to a short-term oscillator chart, then what that'll show is at what point we can even start considering looking to get into the market for a trade on the DIA. And what you can see here is that November 13th, early December, basically we've been in this area 4 times previously, and now we're coming right back into it. This is normally the area that we get a turn, or at least this is an area where we've gotten a turn since November 13th, where the market turned right back up. And so if we don't see the market turn back up immediately, we're going to see the oscillator continue to go below where we were November 13th, and that's going to suggest that that 161 to 160 price range is in fact going to occur. So that's what I'm looking at for right now. Over the next day or two, we should either see the market try and stabilize, or if not, if it continues to just decline, then we are going to see the 161, 160 price range. So that's it for right now on the Diamond ETF. Let me also go over the ETF for the Russell 2000, which is the IWM. And you can see here, right now on the short-term chart, we are also down in the oversold level. We turned September 29th from about this level here. We had a decline November 13th. We also had a decline down into December 13th. So we're in that area here where the market has previously bounced. And if we don't see that bounce in the next 1 or 2 days, then that suggests that we are going to see more price deterioration. But on this IWM ETF, some of you had received the newsletter that I had put out, and it was specifically on the IWM. And what I had said was that if we did not move back to the upside, we were going to see the 107.50 price range. And it looks like we're definitely headed in that direction. Let me switch over to our LT oscillator and show you what I was referring to. So you can see here we had crossed below the zero line back on December 13th or right around there. And the oscillator came down. It tried to stabilize here, tried to move up a little bit, and then turn right back down again. And then today we have the big move to the downside in the oscillator. And what I'm looking at specifically here is the amount of space between the dots, which means it's a very big move, very big gap, And so therefore momentum is accelerating to the downside quite dramatically. And you can see price just completely collapsed below the previous area of support that it turned on December 13th. So we're already down at the 110 level. So my expectation for the 107.50 level is pretty close here. I mean, we're only basically $3 away, $2.50 away from getting down to that 107 area, which is where we turned last time. But the one thing you want to notice here is the oscillator was way oversold September 30th or right around there, with the price down there as well. But if you look at the oscillator right now, we are substantially higher than where the oscillator was previously, and yet the price is already approaching that level. So this to me suggests that we are not only accelerating in momentum to the downside, but the acceleration is very strong, and it could take the oscillator quite a long ways to the downside, which means price to the downside, before we get in any type of a turn. So that's what I'm looking for at this point right now. So I'm going to wrap it up right here, and we will provide another update for you tomorrow. Thank you.